All right. Happy hump day, everyone. How's it going today? Happy Wednesday. I've got one of our top agents here at Bennett Realty Solutions, one of my agent investors, Corey Bonnette, on with us. And so I'm thankful that he's here with me. He's a millennial, love talking to the millennials, and he's doing some big things. He's really doing well for his age, and he's really starting the process of building wealth. So I wanted to bring Corey on just to kind of talk about what his journey has been in these short years, after college, right after, to now in terms of real estate. So, Corey, thank you for being here and introduce yourself.
Yeah. Hey guys, I'm Cory Bonnette. Thank you for having me. 28 years old, went to school in North Carolina at Winston-Salem State University. After that, I got started in IT. Been doing that since I graduated and got my real estate license last year, and I've been investing in real estate since 2018.
And so, Corey, what got you into real estate? Why did you choose real estate?
Yeah, real estate has always been an interest of mine as an avenue to build generational wealth. My dad was actually involved in real estate. I used to watch him go to properties. He used to carry me around to his investment properties. He had different properties in and around DC and Baltimore. So that's where kind of the bug got started. And I used to watch, folks on the internet like Boyce Watkins and reading up on, guys like Dr. Claude Anderson talk about generational wealth. So it was just kind of it just made sense to kind of use real estate as a way to build generational wealth.
And so, what kind of gave you the courage to? So you decided to get your real estate license. What I don't know if you mentioned this, but what do you actually do? Because you're a dual career agent. What do you actually do full time?
Yeah, so I don't do real estate full time. It's kind of more like a side hustle. Right now, I'm doing IT. So I'm a cloud engineer for Disney. That's what I'm doing full time right now. And I do real estate investing and some kind of marketing for leads on the side.
Okay.
Yeah.
And so what's that been like? So you've been a licensed real estate agent for like a year or two. You've been with us, been a Realty Solution. And so what's the last year or two been like?
Yeah, it's been interesting. I kind of got my real estate license as a means to increase my productivity in the real estate world. So I didn't necessarily want to be, driving around showing properties. Mainly got it to get access to the MLS, set up my own alerts for myself to increase my chances to get investment properties for myself. Yeah.
And so that's why I got. And so it's kind of the same journey, Corey. A year
Mhm.
out of college, I started to start buying houses. And so I kind of caught the bug. Actually, at 17 years old, I read an encyclopedia that 95% of
Uh-oh, I think you froze up there. I think you froze up if you can hear me.
yeah, I think
Okay.
we're back.
Yeah, you're back. Yep.
Okay, yeah, something's wrong with our Wi-Fi. But anyway, and so I started. So we kind of started at for the same reasons. And so I started buying real estate, and then I decided to go ahead and get my real estate license because the real estate agents weren't working fast enough. Wanted to give myself more access,
Exactly.
all those kinds of things. And then I really didn't have any intentions on selling. But I was in IT as well, so I was a computer programmer. My degree is in computer science, and I started selling, and got good to me, enjoyed it, and so later quit my job, and then started doing both the real estate investing and selling real estate. Later, bought a franchise, and then now we're independent. And so it seems like you're kind of on that path. Talk a little bit about your investment properties. How long have you had them? How many properties do you have right now?
Yeah.
Um,
So I started buying properties in 2018, and I bought an investment property every year after that. So right now I have four properties. I have two condos in Greenbelt, right across the street from the broker, actually. And then I have two properties in Baltimore, one single family by Coppin State University and one quadplex by Johns Hopkins. So yeah, that's kind of been my goal to just buy a property every year and go from there.
and so what? So why did you choose Baltimore? You bought a couple properties in Baltimore. I actually own properties in Baltimore. Why Baltimore?
Yeah, Baltimore was an easy choice because the property values are much less expensive than the rest of the DMV. You can get single family homes over there for sub $100,000. So it was just kind of an easy barrier of entry for me to get started, as opposed to looking somewhere like DC or PG County. Every Baltimore properties, come up all the time. And my goal has been to kind of to buy by schools. So that's why I have a property by Coppin University and a property by Johns Hopkins. And that's kind of been my philosophy with when I evaluate investment properties. I try to buy by schools because in Baltimore, it can be a little tricky as far as the area that you're investing in. You have to be very picky.
And so those two you're holding those two, right?
Yeah, just holding them. Yep.
Are you using voucher holders? Or are market tenants? What type of tenants do you have?
Just market tenants. I use Facebook groups to market these properties to just get tenants. I don't have any vouchers or Section 8. So just regular tenants that are paying rent. Yep.
And so do you have a crew up there to renovate your properties?
I haven't had to renovate. The properties that I bought in Baltimore have all been turnkey.
Okay.
So I haven't had to do much work. I've had to do a little bit of work here and there for my quadplex. I just got the roof fixed, this past week. Just little renovations here and there, but no complete renovations. I do have some contractor contacts who I can call on when need be in the case of emergency to go repair certain things for the tenants and to go check on other properties that I may be interested in investing in as well.
And how did you finance those two properties?
So with the one by Coppin, I used a regular conventional loan because I bought that for $65. And the quadplex, I just closed on that this past February. I used FHA.
Okay. And so talk to me about the two properties you have in Greenbelt. You bought condos. What was your strategy with buying the condos?
Yeah, in 2018, I was living with family. So my goal was to kind of find something that I could live in. And it just so happened that these condos across the street from the broker seemed to be the best option. So I got one, and then the 6 months after that, I bought the second condo. I just so happened to buy them next to each other. One is 101 and one is 102. I didn't plan it like that. It just happened to roll like that. So the condos were just a good choice, something to get my feet wet, something that I can live in and get started.
And it's probably something that you'll have forever, given that the location, you've got University of Maryland one way, NASA the other way,
Yes.
and right by the Beltway, the Parkway, and so It's just a great location.
Yeah, Greenbelt was a perfect and easy choice. Right next to DC, right next to everything really. So
yeah, so I think these are two properties that you'll probably have for the next 20 years.
Yeah, I'll keep these forever. Keep these for the family. Keep these for my kids and my kids' kids. So that's the plan.
There you go. And so, do you manage? So you've got these properties. Do you have a property manager, or are you managing them yourself?
No, not right now. So I've held off on getting a property manager. I've just been managing it myself. But my plan is when I get one more property, my next property that I want to buy is a triplex. That'll give me the 10 doors. So once I get to 10 doors, my plan is to get a property manager to kind of outsource that work with managing tenants and doing the renovations.
Okay. You seem, very driven and highly motivated. And you seem like one that is not afraid to take action. Where does all that come from?
I don't know. I live by the tenet like scared money don't make money. So, you just have to, you just got to get started. You have to stick with a plan, identify a goal, identify how you're going to get to that goal and just go for it.
And so how are you managing all your time? So you work full time in IT, and then you're selling real estate, you're investing in real estate. How are you managing all that time? Also having, I'm sure you must have some type of personal life as well.
Yeah, absolutely. So yeah, I'm a very good multitasker. I work full time in IT. I also do some consulting on the side with some software engineering, as well as finding properties in real estate. I like to automate as much as possible. So I have alerts set up in the MLS. I'm not scouring the internet for properties. I rely on these alerts to feed me the properties based on the criteria that I want. And then when I identify something that I want to go for, I have contractors that I can call to go out to the property where I don't have to be there myself. They can just go there, identify. I tell them what plan to do with the property, and they give me kind of an invoice for that work, that or how much it will cost to do what I want to do with that. So I try to outsource as much as possible. Calling leads. I've hired virtual assistants in the past that live overseas to do cold calling for me, as well as manage the entire transaction. So whenever possible, I try to outsource so I can free up as much time.
Good stuff, man. So it sounds like you've been coached correctly, mentored correctly. Do you have mentors or coaches that you use?
Yeah, absolutely. Yeah, I have mentors. My dad has been a big mentor for me in the real estate industry, as well as the internet. I tell people all the time, all the information that you need is out here on the internet. There's people on YouTube who I listen to all the time that provide advice for what I want to do. Yeah.
In terms of the real estate investing, what does the future hold? What are some of your goals?
Yeah, so my long-term goal in this is to acquire 100 doors. So that would allow me to replace all of my income that I'm working with a 9 to 5. So I can, eventually get out of that. So my goal is to have enough real estate to support my lifestyle to the point where it's all passive income. And, I can replace that time that I'm spending, that I'm working for money, with just passive income coming from rental properties. So I can free up, all of my time and kind of wake up, do what I want to do with my life, travel the world, and go from there.
And so you're originally from the DMV?
Yeah, I am. Yeah, I grew up in Montgomery County, Silver Spring. Yeah.
Okay. All right. Good stuff. And as far as your real estate brokerage business, what's the future look like for that?
The brokerage business. So I'm never really not that interested in selling real estate. I'm really about building generational wealth. So I just want to buy properties, buy and hold properties, maybe flip some, here and there, and just hold properties for for my kids, my future kids, my kids, and my family. So that's kind of the plan. Yep.
Okay, good. I mean, so that's what it's all about. It's all about acquiring assets.
Exactly.
And allowing those assets to give you the passive income, but at the same time grow in appreciation. And
right.
So with the equity, you can utilize the equity to build even more wealth for yourself. Exactly. And so kind of playing that kind of real estate investment game is what we all should be doing, building that generational wealth. You now have multiple streams of income. You could have multiple streams of income even within real estate investing. And it
right.
seems like you're doing those things. And so I was talking to my coaching students last night, and it's all about acquiring assets and let them work, let them do what they do for you. And so you want to get the doors, acquiring 100 doors, which for you is not going to be that difficult
yes.
Because being so young at 28 years old, your personal financial statement is starting to look better and better and better. And so now banks are going to want to lend to you. When you're going to fill out this what's called a personal financial statement, you're going to put on all your assets on there. And you're going to look really, really good on paper.
Exactly.
Now you're going to be able to borrow money to buy 10-unit buildings, 30-unit buildings, things like that. So you're kind of setting the table to do all of those things. And one bit of advice I would give you is I think that you should set your goals a little higher than 100 doors.
Okay.
I can foresee you getting that pretty quickly.
Okay.
And so I would 10 times that. I think you can get 1,000 doors.
Okay. Yeah, I'll definitely shoot for that. I'm shooting for the stars, so definitely.
Yeah, I can foresee that. I can foresee that in the future. And so, any challenges that you have, any mistakes, any things that you even though you're so young that you would have done all over again? What would some of those things be?
Yeah, some challenges that I run into is maybe not evaluating properties as thoroughly as I could have. I've definitely had to, walk away from deals. I've lost a couple of EMDs. I've had to walk away from a deal the day before closing because it just didn't feel right. The numbers didn't add up. So yeah, not doing my enough due diligence, maybe not going to mentors and coaches and asking them enough questions. Maybe thinking I knew too much or knew more than I did. That's definitely probably been a mistake or a challenge that I ran into in the past.
And so that's good. I mean, it's good that you're humble. And so those weren't necessarily mistakes. Those were just learning experiences.
Exactly. Yeah.
And then you learn from them and they're going to make you stronger. You're going to know not to make those same mistakes. I always like to say investing in real estate is a math problem. Like you've got to get the math right. If you get the math right every time, you'll always win. And so you make your money going in, or you make your money when you purchase the property right.
Exactly. Yeah.
And so we've got to make sure that we do that, because it begins there. And if you start off buying a property wrong, it's just going to be a nightmare. And it's just worth hey, keep my deposit. I made a mistake. I know it. It's a learning experience. Keep my deposit, because if I buy this property, it's going to be worse than, I'm going to lose more than this earnest money deposit.
Exactly. If the numbers don't add up and it doesn't feel right, the deal's not done till it's done. You can always walk away, and it's going to save you a lot more money and headaches, in the long run.
And all that. And I unfortunately, I think about a property I put under contract in Trinidad about 5 years ago, the Trinidad section of Northeast DC. I put it under contract. Trinidad has been booming. Looked like a great deal. I put it under contract without even seeing the property. I went and looked at the property after I won the bid, had a ratified contract. And I said, oh man, so there's two sides of Trinidad, one on the Bladensburg Road side closest to the Capitol, and then another on the other side of Bladensburg Road. This particular property was on the other side of Bladensburg Road. That didn't sell as well as the one closer towards like 8th and 8th Street. And so I said, I made a big mistake, didn't do my due diligence, tried to get out the contract, because it was the same day. I was like, I'm sending over a release. They were like, no, we're going to sue you for the deposit. And so I just gave up $5,000. I gave up the deposit because it was worth, for me, in terms of time, headache, just giving up that deposit. But it was a lesson learned. And the biggest lesson learned is always look at the property first. Never write a contract sight unseen.
Yeah.
And so that was a huge lesson for me.
Yeah, I've made that mistake in the past too, trying to get the contract in as fast as possible without going to see it. And that's definitely backfired in the past. Yeah.
Yeah. So it's a lesson. But look, I spent $5,000 to learn that lesson. But look, I've never made that mistake again.
Yeah.
And so you're a millennial. Do you see other millennials doing what you're doing?
Not to the scale that I'm doing it, but I do have friends and colleagues that show interest in doing it. But I think people view real estate as a large barrier to entry. You have to have the cash to play. But what I tell those people is, you can use programs like FHA where you put in 3.5% down, and actually people don't know that you can use FHA multiple times. I think you froze up again. I don't know if you can hear me.
All right.
Got you back.
Yeah, I don't know why. I'm actually hardwired into the Ethernet, so I don't know what's going on. But but go ahead.
Yeah. What I was saying was, I do have friends and colleagues that are interested in real estate. But I think people view real estate as a very large barrier to entry, because you have to have the cash to play in this game. But what I tell those people is that you can use programs like FHA to get 3.5% down. And what people don't actually know about FHA is that you can use it multiple times. So if you just can't have multiple FHA mortgages at the same time. So
right.
If you use FHA for the first time, you technically have to live in there for a year. And then once you refinance that out to a conventional loan, you can use it again. So that can help anybody, getting started for the first couple of years, scale their business, acquire a couple of properties in a few years. So.
Yeah, that's house hacking. So what a lot of people do is they'll buy a 2-unit, 4-unit. Anything 4 units or less is considered residential.
Right.
And you can live in 1 unit, get an FHA loan, and rent out the other 3. Yep. And then, like you said, after about a year, you can rent out your unit you can refinance out of that FHA, and then go do the same thing if you like.
Yeah, that's exactly what I did for this quadplex that I just closed on. The FHA process is not easy. Their job is to really nickel and dime you on you just have to make sure all your documentation is correct. But if you can get through the process, it's definitely a vehicle that you can use to acquire real estate easily.
Okay, and so speaking of millennials, also, what advice would you give them? What advice would you give them in terms of starting the process at an early age of building wealth? Because you're starting early, and so your properties are going to continue to the equity is going to compound, and it's going to really appreciate. We've gotten really good appreciation over the last 2 years, I'll say. And so they're going up in value, and they're going to continue to go up in value. And so that's how really you build wealth alongside of the passive income with the cash flow. What advice would you give millennials?
Yeah, the advice that I would give is find a mentor or coach. Because if you're out here trying to do real estate by yourself and you have no one to lean on to ask questions or to get advice from, you're going to make many mistakes, and you're probably going to get in deals that are not favorable. You're probably going to lose money. And that's just not an ideal situation. Another piece of advice I would give is to start out getting your real estate license as your first step. That way you can act as your own agent. That's one of the things that I wish I did before I started acquiring real estate. I got my license last year when I already had 3 properties. So if I did that right out of college, then I would have been in a much better shape. I may have gotten in, better deals. And I would have been able to kind of control my own destiny a little better than if I didn't have my license. Yeah.
And so I may have asked this question, but where do you see yourself in 3 years?
In 3 years, I'll be 30, 31. I see myself with about 20 doors in a very good position to be able to quit my job. So. That's where I see myself in about 3 years.
Good stuff.
Yeah.
And so, I'm very impressed. One of the people listening said very impressive. And so, so your challenge is to keep the momentum up and keep up the focus, stay highly motivated, and put some things in place, some systems in place, some people in place that's going to keep you motivated. Surround yourself with all the right people that want to achieve or have already achieved what you want to achieve. And with those things, you'll like I said, I think you can 10 times your goals. And then set short-term goals. Do you have like short-term goals? Like, what do I want to accomplish this year? What I want to accomplish next year? What do those look like?
Yeah, my easy short-term goals is to just buy a property every year. That's pretty much as simple as it's going to get as it pertains to real estate. Other goals is to implement systems that multiply my passive income to maybe I can even purchase more than one property per year. But I'm getting to a point where I can't really use FHA anymore as of right now. So I am going to have to cough up that 20% on my next property. So my short-term goal is just to buy a property every year to the point where I can build my passive income up to eventually quit my job.
Nice.
Yeah.
Okay. All right. So you guys, if you guys have any questions or comments, go ahead and put them in the comment section. A lot of you guys have already put comments in. This is Corey Bonnette. Are you sure it's not Bennett? Is that should that O be an E?
Yeah, we might be long lost cousins, right? Yeah, it's Bonnette. Some people say Bonnette is supposed to be French, but yeah, Corey Bonnette. Yeah.
Okay. All right. So it's good stuff. This has been really good. I think this has been very motivating for all of us, but especially for millennials. And so that's one of the things that I want to do is bring on more millennials that are doing it, that see the vision, that have the type of mindset that you have, and it looks like you're very, very focused. And it seems like one of the things that you think about on a daily basis is how you can, achieve at a high level, how you can live up to your fullest potential, and you're not afraid to go for it.
Absolutely.
And so that's really good. Your father and mother did a good job.
They would be glad to hear that. Yeah.
Okay. All right, man. That's all I have. If someone wanted to reach out to you, to talk to you, how do they find you?
Yeah, you can find me on Facebook at Cory Bonnette. You just search me up, or you can find me on Instagram at Sort of a Genius. That's SWORD of a Genius. Feel free to contact me with any questions. If you're a millennial, I'm always looking to network and build my network. Let's work together and build this wealth.
There is one question: advice for millennial first-time home buyers.
Advice for millennial first-time home buyers. I would say, don't be afraid. It's definitely a journey buying your first house. It could be a very scary process. Don't be afraid. Trust the process. Trust your realtor, and just know that the journey will get done.
Absolutely.
Yep.
And so for millennials, focus on credit, focus on saving your money. Know the first-time home buyer programs. Get with a real estate agent like Cory, who knows the process, who knows the programs that can help you out. And so that's what I would say. And it's much cheaper to actually buy and own your own house versus renting.
Absolutely.
And then home ownership starts the process of building generational wealth. And so, in whatever it is, I think Cory started off buying. Was your first property a condo?
Yeah, my first 2 properties were condos. Yep.
And so, even if they're condos, it's real estate, and you own it and you control it. And so, and that's what I did. 23 years old, I bought my first property. And so, and I haven't. And my goal actually was to buy a property a year. And then after the 5th property, I was like, look. I had quit my job already. I had equity in my properties. And so I would pull equity out to go from buying 1 a year to 2 a year. And then there was a time during what I call the real estate heyday between 2000 and 2006, before the recession, where I was at the point where I was buying a property a month. And so you scale. That's why I said 10 times those goals, you scale. So where you are right now is not going to be where you are, say, 3 years from now.
Exactly.
You'll be in a much financial position because of all the wealth that you've already created, and then you utilize that wealth. But more importantly, you utilize the knowledge that you've gained in that period of time to really scale your business and keep going up and keep wanting to do better. And going from where you are with residential to now maybe Airbnb, assisted living facility, commercial property, multifamily, all those kinds of things.
Yep.
Oh, all right, Cory, let's go. You're the man, Cory. Great job. I really appreciate it.
Yeah. Thank you guys for having me. It's been a pleasure.
All right. You guys have a good Wednesday. Take some of the key points that Cory talked about in terms of building wealth. Take it one property at a time, but prepare yourself in order to do that. And so whatever that looks like for you, if it means fixing your credit, if it means getting that good job that's going to give you the type of income that so that you can pay for that, that mortgage, eliminate your debt. Don't try to keep up with the Joneses, make sacrifices. I'd rather see you buying a house than driving the fanciest of cars. And so sometimes it takes sacrifice. Your status will be in your wealth. And so sometimes people want to buy fancy cars and things like that. That's not an income producing asset just to keep up, just for show, but or for status. But your status is in the wealth that you have. That's the true status. So let's take some of those keys that he talked about, and let's use them in our own lives. All right, you guys, take care. God bless, and we'll talk to you soon. Thanks again, Cory.
All right, no problem. Have a good day.
All right, bye.